Happy Wednesday, everyone. How is everyone doing today? Good morning, John. You're interested in Adobe. Please remind me as well once we get through the futures. Good morning, Mark. What else do we have? Good morning, Sterling. Thank you. Thank you for putting in. Is today your day off, Sterling? Did you get today off still? Uh, Thank you for being here, by the way. We've had Waller speaking. I'm not even going to comment on that. Yesterday we had Barkin, who sounded a very hawkish and started the sell off yesterday, and then we followed up. We followed up yesterday with the services PMI, but look at the prices. I told you to watch that 10 a.m. print. First of all, job openings climbing up again, and then services. This is from yesterday, 64.4. Why do I bring that up? Because Waller is mentioning that he, sees inflation easing. I'm not seeing it in the numbers. I don't know what numbers he's looking at. Good morning, Ted. Good morning, Anissa. So I got to get that in. But I think he mentioned something on services inflation. And by the way, by yesterday's print, services inflation is not, and wages in the service sector is not under control. So I don't know what data they look at, but he wants to continue cutting. So that's where we sit with that. Thank you for putting in the earnings also, Sterling. Good morning, Eric. Good morning, Royal Palms. What else do we have going on? We had the MBA 30-year mortgage rate climbing still, close to 7%. Now, based off the 5-year, this should keep going up. We already talked about Waller speaking. ADP, which I don't really pay much attention to, was a miss. Was actually a miss down. But then we had the jobless claims, remember, because tomorrow stock market's closed and futures are closed at 8:30 a.m. Central, 9:30 a.m. Eastern. I am taking tomorrow off. I'm taking tomorrow off since the stocks are closed. I mean, futures are still trading. We'll get to that in a second. Some of the futures markets are trading, but the main ones aren't, and I'm going to take tomorrow off. I need a mental health day. There's a lot going on. Jobless claims coming in better than expected, 201, 218. So I'm wondering if inflation could still be climbing and jobless claims are hanging in there. Continuing jobless claims coming in slightly better than expected. Why are you cutting? Just wondering. What are they looking at? By the way, we also have the FOMC minutes from December coming out at 2 Eastern time. So that's where we sit today with that. Good morning, Heinrich. News: Mexico renames Gulf of California to Gulf of Mexico in preemptive strike. Yeah, we have to have, I recorded Futures Edge with Bob and Jim yesterday afternoon, so you'll have to watch for that to come out next week. We talked about the Gulf of America. We did talk about the Gulf of America, so you'll have to see what we said next week. What's it looking like this morning, though? What's it looking like? NVIDIA, which NVIDIA was down 6% yesterday after gapping up to barely a new high, reversing 6%. That is not healthy. Okay, we're starting to get a tone shift in some of these mega caps. So watch it. We'll take a look at that too. Google down for today. The groups, let me just refresh this. We have healthcare and technology and basic materials and consumer defensive are up slightly. Energy, comm services, and utilities are down. Fed watch, we have 95% for a pause in January. Let's take a look at this. 57%, now Waller wants to keep cutting, but 50%, 7% for a pause in March. 45% to hold it as another pause in May. And the first cut is really in June. So the first cut is being priced out till June at this point. By the way, I was talking about those. You can see here in the upper corner, it might be a little hard to see, but equities, the futures, 8:30 Central Time. Energy, normal hours tomorrow. FX, normal hours tomorrow. Interest rates close at 12:15 Central, so 1:15 Eastern. Metals are normal hours. So that's just what I wanted to comment. So I will not be here tomorrow. Fear mode still. PE still in the mid 37s. Sterling put in the earnings. Albertsons was the only thing I'm really looking at. After the close, we really have nothing. Tomorrow morning, again, there's nothing that's going to be market moving. I won't be here. All right. So yesterday we had the South. Now we did have that little double. We had that little double that hit the first target, and then you had the Fed speak, and then the ISM numbers came out and selling off into the close. We do have a little mini double bottom. It's very sloppy. It's very sloppy. You can see it here. That's the only thing that will make me more possibly bullish for the next little bit, possibly through the European session. Would need a follow through with a 1 hour close above 59.74.50. And again, the target area is only just shy of the breakdown, or just over the breakdown zone, which was formed yesterday at 6,010. The final target is actually 6,015. So this one, again, I would not ignore raising a stop because you're getting more and more selling pressure coming in. What else do we have? Gulf of the Americas, which that should be a pretty fitting name, but why fix something that's not broken? Because Trump wants to rename things and everything else. Because that's part of Make America Great Again, I guess. So let's just rename stuff and let's take away Mexico's name and rename it Gulf of the Americas. So other than that, I'm paying very close attention to about this 59.35 area for support if we sell down there during the open. And beyond there, the next key support area is 59.15 for me. 59.15 is very, very key. It's where we closed on the 2nd of January. We've dipped below that a couple times because we start breaking below that, not looking good. Especially if we close below that level, not looking good. We have daily cycles back to the top too. So we're going to be watching for more rollover plays. We spiked in the rotation zone on Monday, closed just below it, and yesterday rotated back down. NASDAQ. The key levels I'm watching, we do not have a little mini double. So the key levels I'm watching are about 21,470. And if we went above that, here's the key little thing I'd be looking at. I'd be using 21,560 and then 21,643 right by the prior breakdown zone. That would be the targets higher. My breakdown area, which is right now key support, is 21,220. But again, not looking super strong. We have not triggered a massive topping pattern yet, but not looking super strong. The Dow, we're the potential doubles off the table now in triple bottom territory. So going to be with cycles back to the top. The Russell, which confirmed but not triggered, came within 0.6 of invalidating it. I'm just taking it off at this point. It's technically not fully invalidated yet, but since tomorrow's the holiday, I'm pulling it off, and it never triggered, and it is against the rotation zone still. The VIX climbing up, slowly climbing, but not in critical state yet. The DAX spiking up to the 87.5, and then reversing, forming a potential double top. So we have a confirmed potential double top in there. We have a confirmed potential. It's not confirmed by price action yet or triggered. So that's the only thing I'm looking at with the DAX. The notes continue to march lower. This potential double is off the table now. Getting a little bounce back after Waller's speech, but I think he's just trying to placate the markets a bit because the yields a little pullback, but the yields tapping out the 87.5. which we talked about that magnet price of 4.7, actually coming right up to the next harmonic and retreating. So key support now coming in back at 4.63 to 4.65. So this continues to march higher. Might take a little break tomorrow, but nothing that's really stopping the notes yet. We might be setting up for a little divergence, which means we could consolidate up here. We might run out of steam, but there's no major sell pattern yet. Dollar index bouncing back strongly. Still watching for higher prices in this. The only thing that would change my mind, this isn't very nice double top territory, but we need a close back below 107.96. So that's the only thing that would shift my short-term bullish stance on the dollar. Okay, we also look here on the weekly rising rotation zone. Really nice with 8 potentially pushing the price. And the dollar can still run to the October 22 highs potentially. Crude. Have a little mini potential double top here against a very strong resistance area. So I'm going to be watching to see if that triggers. That's the only thing that would get me in pullback mode in the short term on crude. Other than that, this might be invalidated before it triggers because we got a rising rotation zone in the way. But we're up against some very major resistance area up here in crude. So that's why I'm watching for a topping sign in here. Natty gas, not much to talk about there. Gold, we got the channeling double. Nothing's changed since yesterday. Still 26.97 really is the first target, then 27.29. Talked a fair amount of gold on the recording for Futures Edge, so I'll let you tune in next week to that. But I think you already know my stance on this. Silver eked out a slightly higher close yesterday and continues to march higher with the little mini double. So remember, from my perspective, stop reductions at about this 31.15, and then you have the two targets about 31.50 and 31.82. What else are we sitting on? The yen continuing to just grind higher. Still got the magnet price 159.15. Nothing to talk about there unless they intervene. Not much to talk about on the euro. Is the euro in potential double bottom territory yet? No. Yes, it is. Yes, it is. So that's the only thing that would shift my stance in the short term on the euro. Would that really change it in the long term? No. It would just be back into the weekly rotation zone. But that would just be a short-term bounce potential play, but it's not close to triggering. The spiders coming up rejected between the 50 and the 62.5 and rolling over here. I'm just pretty much using the harmonics. Key harmonics on any rally would be 591. And if we start breaking strongly below yesterday's low, 586.78, which we're down below right now. Hold on. 586.78. No, we're above that. So that's my breakdown point. Sorry, we could not read the numbers. 586.78. If we break below that, 584 is the target for me. On any rally, I'd be watching yesterday's close. 588.63. which we're trading just below it right now, and then I choose 591.21 on any bounce back rally. The Qs trading 514.68. Yesterday's low is 513.28, so that's the breakdown for me, and then the target area is 510 roughly. On any rally, back to the close, 515.18. RSP looks like it might invalidate the potential double bottom that's not triggered. So that's what I'm going to be watching for this to go off the table. NDXE, which confirmed, has not triggered the double and is farther away from invalidating it. But if NDXE, the equal weight, because this was the only potential bullish case, if it trades back below 76.21, it's off the table. I know we got Adobe. Let's just take a look. This is what I was talking about with NVIDIA. That is a pretty bearish bar. And there is a potential weekly double top now in NVIDIA. Not close to triggering yet, but pay attention to 126.86. Also with Broadcom, I'm pointing these out because these have been leading the markets a lot higher. We do still have the potential daily double, not invalidated yet. The rotation zone would be out of the way on the daily basis. So if this closes back below 217.58, I'm going to be looking for a continued pullback, possibly to the gap fill from earnings. Hey, Richard, how you doing? Now, I know we had Adobe. Adobe has now broken very key support with a confirmed close below there. Retested it this week, rolling over. Any rallies I'd be looking to potentially sell on Adobe. What will then confirm it is if we close below 411. That will really then shift the probabilities to possibly retesting the low threes areas. So we are getting oversold. We are at cycle bottoms. So would I aggressively be shorting something here? No, I'd be watching for returns. We already had the return to the rotation zone with the 8 pushing the price. I'd be looking for any bounce plays for rollover moves in Adobe. What else? So when you have a moment, Veil is in the target zone. Wait for the gap fill. Veil finally hits that 87. Wait, would I just be running out to buy Veil? No. There is no bottom pattern yet. Yes, it hit that 87.5, but you also, as you pointed out, there is, I believe, a gap still left behind. There is still a gap, so you technically till 827 gap price. And I'd start watching when it gets into these maybe closer to 8 for a more significant bottom pattern. We don't have one yet. There isn't one yet. Again, I don't like to try to call bottoms. I like to wait for a bottoming pattern to set up. Because again, any bounce can just roll over in the rotation zone. There'll be a bottoming pattern that sets up. Just be patient on that. That is really about it. We got Tesla still looking like this really wants to break down. What'll be a key level for me is this 367, 368 area. Now, is this in double bottom territory? Not yet. It might get down there today. So that's the only thing that, if that sets up a double and then it were to close back above 426.43 is the only thing that would put me in short-term bullish mode. Other things like Apple trading against the 50 EMA might never trigger, but there is a little mini potential daily double. That's the only thing that would make me short-term bullish on Apple. But a lot of these things, like look at the rotation zone on the daily for Apple, turning it into probably bearish mode today. And if this breaks the 50, we could easily see continued pullbacks. Remember, Apple is not cheap and it's not growing much anymore. P to E at 40. Okay, so keep an eye on some of these things. Meta, which again, we had the little mini double bottom. You had to trade it intraday on the run up, but then look at Meta yesterday. Gapping up to the final target and then a reversal. Could not sustain anything. So after all that supposedly bullish news with Meta stopping, their fact checking and censorship, it trades back down. The tone is starting to shift in these mega caps. Have we really broken down on them? Not yet, but that's what I'm keeping an eye on, because if those start breaking down, the market's really going to shift, and it could shift abruptly based on that news. Like this bar, look at the size of that bar. That's the 60% drop after eking out a new high. That is significantly bearish. I mean, we don't normally have drops. This one was like 3.5%. This was 6.22%. That's what I'm pointing out. I'd be cautious in this market now. And then we have not triggered the any longer or medium term sell patterns yet. But look at this. It's running out of momentum on each rally. So just keep Keep that in mind. We finally found what gets cocoa bearish. What? Trump? Cocoa, are you, is Trump causing, now, are we still 25K though, Nat? Or is it going to be when it doesn't get there, you're going to blame it on Trump? It could be also when Trump gets in, sell the news, you know? Sell the news. Because things aren't going to turn on a dime. And I think it's going to get through a lot tougher before it gets better. So, and I'm not seeing it, like, if you look at this, we already talked about yesterday, this just keeps slowly climbing. The commodity index, live cattle, which is something we don't normally talk about. Live cattle. Look at this. Look at live cattle. This is not disinflationary. Yeah, this is a weekly chart, but look, it's now broken above the prior highs from September of 23. You think meat prices are coming down or even going to hold steady? Look at this, higher low, higher low. Look, breaking out from this top area. I mean, we could go back and test the highs from 14 and possibly 06. Not disinflationary. So you got a lot of stuff like that. And as we talked about also yesterday again, your ags. Your ags have been climbing, steadily climbing. So your inputs, like grains and everything, inputs into stuff like cattle, have been climbing. You know, a little slight pullback, just a key support. But even if it hangs out up here, that's not disinflationary. You got a lot of inputs that are not disinflationary right now. So I'm not saying inflation has to go back to 5 or 6%. I'm saying again, what if it's sticky around this 3%? It's not anywhere close to that 2%. And 2%, I don't know where they came up with their target because their mandate's technically zero. If you read the mandate, it's technically zero. All the food-based commodities are also under pressure from greenies and climate fanatics, especially live cattle. Well, you know what? They just want us to eat bugs. So there we go. So just, I'm not saying, you know what, longer term, we're still back to the weekly rotation zone. Remember, if we close this week or next week below this, just remember 5,900 overall. If we start closing below 5,900, technically the level is about 5,930. If we start closing below that level, weekly will go to neutral mode, okay? And daily will be in bearish mode, which means it's more aggressively sell the rallies until we form a strong bottoming pattern. Now, we're getting to weekly cycle bottoms against very key support, so this might not break down. But I am in cautious mode in case it does. Tesla short targets. Then we'll wrap this video up. Tesla short targets. My area would be right around my initial area. If I was structuring a trade on a breakdown, my first target would be right around the 350 and then the 320 area. Those would be my two first key targets. Also, if you look at Tesla on the daily, we could be going into bearish mode, and on the weekly, you know, I'd watch the weekly bottom of the weekly rotation zone, maybe about 325 for the second target if we do break that down. So keep that in mind also. Why dollar index and gold go up at the same time? They can go up at the same time. I mean, dollar's been on the run for a while now, hasn't it? I mean, dollar's been on the run. Yeah, gold's taken a breather. But there's been times the dollar and gold rally is not usual. They normally trade inverse. But again, I think we talked gold, and there's some stuff, especially with the metals, that's inflationary. Still, things aren't looking deflationary. Or so, even I don't care what Waller says, it's just not looking at it. And again, I don't care. I trade the patterns. Gold and dollar can go up. Gold is still riding the rotation zone higher. The only thing that, again, short term, the only thing that would make me watch for a bigger pullback on gold is if we trigger this, on the dollar, so we trigger this rotation zone. And gold, as I talked about, starting over the next couple weeks, I'm watching for a significant potential bottom be put in. Whether it's put in or not, don't know yet. But my early warning sign is a close above 27.30. We could be off to the races again. With that, let's just peek at the open in the S&P, if we can actually see it. So only thing short term would be above 59.60, and then I'd be targeting that 59.75. When we close above 59.75, we triggered a double. Other than that, very key support going in the open is about 59.40. Let's see where the tick is. I should just add that to the watch list. See, that's a pretty negative tick opening. So I'm going to watch on this tick bounce back to see if there's any strength that comes in. But if the S&P, because that's a pretty weak tick opening, if the S&P cannot sustain back above 59.60, not interested in anything from the bullish side. All right. You're welcome, Richard. Everyone have a fantastic rest of your trading day. Remember, if this double were to trigger at all, do not ignore raising stops. Just like yesterday, we had the double trigger. It hit the first target, which I use always to raise stops, and then it took the dump. So don't get caught blindsided, because it really looks like we're getting more and more selling pressure in this market. So you can't take the bullish trades for granted. That's my little advice. With that, I shall talk to everyone on Friday. All right, if something major happens this afternoon or something major happens in some market that we got to talk about, I would pop on. It's not likely. So enjoy a break from me tomorrow, and I will be back on Friday. Talk to everyone later. Bye for now.